Okay, MegaWhale team, thanks for tuning in to today's video. We're going to go ahead and get straight into it. We've got three charts to talk about today. We've got our short-term time frame chart here with the rising wedge. We have our macro chart, which is going to be on the standard chart, and then we have our Bitcoin dominance chart over here. Before we go ahead and get into the video and talk about what's going to happen with the price action, what our targets are, what we can predict, all that cool stuff, go ahead to the pinned comment down below, click read more, click join the free Telegram channel. We have a variety of different updates, market analysis, we post all our videos in here, so you won't miss a singular thing that we post. You can find everything in here. Of course, we post a variety of other stuff as well. If you're interested in our VIP channel where we do trading signals, setups, calls, you can go ahead and contact me to join. As you can see, all of our traders have specific entries, target, stop losses, potential gains, and risk reward ratios. We do not trade low liquidity coins. We only trade coins that have enough liquidity so we don't pump these prices. It's not a pump and dump channel, it is a trading channel. If you're interested, go ahead and contact me. Let's go ahead and get straight into the video. So we're going to start on the larger time frame chart, just because it's going to be easier to go from larger time frame to break it down. So there's two things I want to go ahead and pinpoint, and this is kind of an extension from yesterday's video, and I'll quickly summarize what yesterday's video said about this chart and then get into the new stuff. So first and foremost, for all the new viewers to this channel, welcome to the channel. This is kind of how we go ahead and chart. We have horizontal levels, which are indicated by these red and green lines. These are singular price points which represent a strong level of support. Then we have these gray boxes which indicate support zones. So an area of support between two horizontal points. Support zones are generally much stronger than individual points of price acting as support, and as vice versa, they're also stronger resistances. Generally, when we see price moves throughout, so through from the bottom side or through from the top side, the support zones, we see more aggressive and faster moves to whichever way that price broke through. So looking at the price action right now, we have lost a very major support, which was up over here, 28,000. We also lost our 200-day moving average. And the 200-day moving average isn't really a support, it's more of a zone of confluence, or an area of which we would expect some support. So there's a difference between an actual objective support zone and an area of which we would expect support. The difference is a support zone has historical purchasing and selling. So support zones historically have a lot of purchase and just trading volume within these zones, which represent, these zones are going to be trickier to move through, whether it be a resistance or support. Where moving averages don't do that. They simply represent the average price over a period, and people tend to put orders at these prices. It's more of a psychological support. So we do sometimes see the price smash through them, sometimes we find support, other times we break through them. What they can indicate though, is they can indicate reversals, because average price, when we're below the average price, we're in a downtrend. When we're above the average price, we're typically in an uptrend. So that's a very general rule for it. So what we're looking at here, first and foremost, for reversal, guys, we're looking for a break over and hopefully a 7-day close above that 200-day moving average, which is currently sitting around $23,000. We'll come back and talk about that in a second, because we have this chart over here, which I want to go ahead and kind of bring up in regards to the 200 moving average. So to draw a line over here, 200 moving average will be kind of sitting through that chart like that. So we see this massive resistance zone where that 200-day moving average is kind of sitting, which obviously isn't very good. But if we can break a major resistance, it turns into a major support. Alternatively, right now, it is a major resistance, and it could definitely send us downwards if we are able to push back upwards. So we'll come back and talk about that in a second. I'm not going to get too far ahead of ourselves. All right, so we'll establish major resistances, major supports. Obviously, if we lose this next major support, our targets are the subsequent levels, which are indicated on the chart: 14,000, 12,000, 10,000. All right. We do have this 200-day moving acting as major resistance, like I said, and if we don't close above that, this candle will most likely fall below. All right, that's just the reality of it. This candle will most likely fall below. What does that mean for the macro? Well, it means we'll most likely lose the $18,000 level. If we can't get back above the 200, we'll most likely lose the $18,000 level. And the 200 is very important because, guys, we have never really closed much below the 200. You can see in history, we don't really close below the 200 that often. If I go ahead and look at the weekly on the macro chart, we've seen 1, 2, 3, 4, 5 candles close underneath the 200-day moving average in the history of 9 years of Bitcoin. Every other time, we've kind of seen this drop below, touching this black trend line, and a close above, and we have this uptrend continuation. Now, obviously, this is still the bottom. There's still time to accumulate. And I'm not going to say, we're going to see this rapid price surge upwards straight into a bull market. Not going to happen. It's going to be a slow surge upwards and then a continuation if we do flip bullish. But we're getting ahead of ourselves. Again, we don't have the reversal yet. There's no confirmation. We only have assumption. Let's move it back. What can we do to confirm this reversal besides the 200 moving average? So the RSI is what we're going to be talking about today. Because the RSI is particularly good at predicting momentum. And as you already know, if you've been following me on the channel, I love the RSI. I use the RSI in daily analysis. My win rate is over 90% because of the RSI. I attribute my win rate to the RSI. I use the RSI to confirm movements. So I use it to confirm breakouts, breakdowns, whole variety of movements we use the RSI to confirm. Because momentum is what drives price. And the RSI tells us the velocity, momentum, and speed the price is moving. So what we can see over here is we can see a falling wedge structure forming on the RSI. And you may be thinking, well, why is there no falling wedge structure on the price? Because the price on the RSI, although they share similar shapes, the momentum, velocity, and speed of which the price is moving at individual times is different to that of which the price is moving. Or what should I say is it reflects differently between the two charts. So you have these differences, this discrepancy between the shape of the price action and then the shape of what we see on the RSI. So generally what we're waiting to see on the RSI is we're waiting to see two things. We're waiting to see a breakout of the RSI upwards with a combined or in combination with a breakout of a trend line, which I'm going to go ahead and draw. I don't know why I removed it, but if we go ahead and draw our trend lines in over here, we have our our descending channel should be something like this if I draw it in correctly, and a breakout of that ascending channel. So go ahead and copy and paste this over. I had it in yesterday. I don't know why I got rid of it on my chart, but it looks something alines of this. So we have our ascending channel over here. We have fake outs, and we can confirm those fake outs. If we just go ahead and look at the RSI over here, we have these periods of fake outs, all right? Fake outs, all right? Fake out over here. But obviously on the daily, it's not really adjusted. We have to go back to the 7-day, and then you can see more accurately what we're talking about. So on the 7-day, we really have this one huge fake out, which was at that 48K zone, all the way back over here. So pushing upwards, of course, would break this trend line, break out of this trend line, and confirm that move upwards. Until then, we don't really have confirmation, guys. So the RSI can be used to confirm momentum and confirm breakouts. So in conjunction with the 200 moving average, if we don't get that breakout on RSI, we won't really have that confirmation. We've still got a chance of moving downwards. So I'll be definitely keeping an eye on that. Let's move back to the short-term time frame. So the short-term time frame, guys, is showing that rising wedge, and a rising wedge is a bearish formation. It's when you have two trend lines that are moving upwards and the price is moving between those trend lines, eventually expecting to break down. Now, the distance of which we expect this to break down, we can go ahead and apply a measured move. And a measured move is taking the distance between the lowest point and the first initial retest and applying that to the exact point of breakout on the wedge. And it takes us to about $18,000. And we already know $18,000 is that lower support, so it doesn't actually suggest a breakdown below $18,000. It's suggesting a lowest target of $18,000, which is perfectly fine because that still means we are finding support on this black trend line. Totally fine. What it does also suggest is we can find support at any point along the way down, which is sitting here at 19,800, 19,200. Because although a measured move tells us where the price could potentially go, it doesn't tell us where it's going to stop. That's a really important distinction. And we generally find the price will move until it reaches the area of support. It will find support, continue upwards, or it will lose that support and move to the next support. Again, find support, continue upwards, or lose that support and move to the next one. So we have this continuation downwards, or we have this jaggedy effect where it kind of staircases down until it reverses. So that is kind of what we're looking for in a short-term time frame, guys. Of course, it's not looking very bullish here. I wouldn't expect this price to just automatically flip around and turn upwards right now. I don't think it's going to happen. I think we see a little bit of a move downwards in the short-term time frame. Of course, we have talked about this area over here, and on the short-term time frame, we do need to break above this area, particularly this upper dotted line, for us to actually flip into more of a bullish short-term trend. And I think it's really important to distinguish between macro bullish and short-term bullish. We're going to go ahead and draw a zoom out a little bit and show you that wedge we were talking about. So I did in fact have the wedge. It was on a different chart. Here's a chart of the wedge. This is an interesting chart. We have our wedge formation, and we have this downtrending dotted area of resistance, and this is a resistance zone. So imagine this is a gray shaded box, right? But it's just horizontal, it's just diagonal, so a gray shaded box. We can see that every single time we kind of push through this box, we have an upward movement, and we have support along this box a lot of times. You can see a lot of support along this box. We lose that box, we head downwards. All right, this has acted as a major zone of support for Bitcoin for a very long period of time now. And we have to assume when we're underneath this, we are very bearish. And it's true, we are in a downtrend, we are bearish, we are probably going to continue downwards, but like I said before, we do have data to reflect that we could potentially be closer to the bottom, if not bottomed out already. We just need confirmation of a reversal to actually confirm that is the case. So moving back over this dotted trend line for me personally, that would confirm the break over a 200-day moving average. That would confirm a bounce on the bottom of the RSI. That will confirm a break over a major zone of diagonal resistance on the chart. It would also break over the Ichimoku cloud. It would also break over the bull market support band and the upper band of the super trend 10 to 2. So you'll have a lot of confirmations of a reversal at that point if that occurs. I'm not holding out for it, but if that occurs, that is when I would assume that we'll see a continuation upwards to at least retest this upper trend line at around $30,000. All right, so short summary of what we've talked about so far. We expect the price to continue downwards on a short-term time frame to our designated areas of support. If, however, we do somehow break upwards, we do need to break above this resistance zone. If we break and hold above the resistance zone, we expect a move upwards to about $28,000 to $30,000 for that next Bitcoin move. Okay. Bitcoin dominance, guys, it is broken down from a major resistance zone. And we talked about this resistance zone months before this actually even occurred. We're talking about it way down over here. We're telling you, you know, this is kind of going to be our target. We've found resistance a few other times before. We did, in fact, find resistance there again. And we have broken down, losing this major resistance and support zone indicated by that gray box. We have dropped back into this falling or this descending wedge, or you can even say a triangle over here. And you know, this is obviously a bearish pattern with a lower support over here, and it is indicating that we are back in here again. Hard to say exactly what is happening here, but it is telling us that Bitcoin dominance is dropping, and therefore the amount of money in Bitcoin in comparison to altcoins is dropping at percentage base, because again the total cryptocurrency market cap is falling. Now, if the total cryptocurrency market cap was rising while this was happening, we'd expect altcoins to be rallying, right? But total cryptocurrency market cap, as you can see, is falling while dominance is falling, which means altcoins will be falling percentage-wise pretty much equal to that of which Bitcoin is falling instead of more. They're not going to be aggressively underperforming Bitcoin. They're going to be kind of matching it. So it's hard to say what's going to happen here, guys. We do have support at this red line. The logical explanation or prediction would be that we come down to this red line here, and then we take another look at it and analyze it again. But again, if we do push upwards, we have resistance at this line over here. And if we do lose this level, we have support at this level here. Okay, guys, I'm about to wrap it up. That's about it for today's video. Short and sharp, really just talking about, you know, what actually needs to happen for us to flip bullish. Talking about those three charts, making you guys really aware of the short term for Bitcoin, that we do have the potential to go downwards, and talking about that larger time frame, talking about the RSI and how we can actually use that to confirm a breakout upwards. And just to go over that one more time, breakout of the RSI over here, plus we need that, plus we need a breakout of this ascending channel. If two of those things occur, if that and that occur at the same time, that will be a confirmation that we've broken this downtrend. All right, that would be the confirmation. Now, that doesn't mean we've turned macro bullish. Very different. Breaking out of a downtrend doesn't mean you're bullish. Sometimes you're not just bullish or bearish. You can be neutral, right? You don't have to be a bull. You don't have to be a bear. The pattern definitely doesn't have to represent bullish or bearishness. It can indicate, you know, a split between the two. You have, you know, 40% bearishness, 60% bullishness. There's always a little bit of a split. It's never 100%, 100%. There are periods where it's very, very significantly skewed to one direction. But if we broke out over here, all it's telling us it is gaining more bullish momentum. That's all it's saying. That's all it's saying. What does bullish momentum result in? It results in the price moving upwards, all right, most of the time. So then we'd expect a move upwards to this range here. Of course, resistance zone, we could definitely go down from there, or we could push back upwards. And if we push upwards, guys, we do have that 48K. And that 48K, if we break over that 48K, that is when we flip macro bullish, right? We've been telling you the entire time. Now, we've talked a lot about when you should look for entries. We'll quickly go over that again, just because I know I don't want to refer you guys to another video. Just you're already here, so I may as well just go over it. Accumulating down in this gray box is where you want to be looking to enter. If it does fall below the gray box, that is when you look to sell. All right, very small risk, very small tight invalidation, great possible entry. Breaking over this next dollar trend line is the next point to enter the Bitcoin. All right, if you miss that dollar trend line break, your next point to enter will be on this downward trend break. Okay, that is kind of what we're looking for over here. Altcoins, we're not looking to accumulate altcoins or hold altcoins until we have positive momentum flip. So we're looking for that break out of this plus the RSI to break. When the trend is more favorable in terms of when we're more confident in the longer term time frame of the trend, that is when you can look to hold altcoins. Statistically, altcoins perform horribly in downtrends compared to Bitcoin. That's why we've told you ever since November not to hold any altcoins. There's no need to hold altcoins right now. The market is down. You only trade them. All right, you only trade them. That being said, guys, I'm going to go ahead and introduce Bitget and introduce the Crypto Academy, and then I will leave the video with you guys, and I'll catch you in tomorrow's one. Okay guys, so we're going to take a look at Bitget next, and I highly recommend sign to Bitget. This is where I personally trade. So if you want to be trading where I trade on a daily basis, sign to Bitget. In the comment down below, you'll see the referral link. Just go ahead and click that. You can sign up and you get access to our reward center if you sign up. And there's a whole range of different things you can do here to basically get rewards. And you know, the rewards bonus is up to $4,163 US, which is pretty significant. But you can go ahead and get access to that if you click the link down below. Beyond that, guys, I really do like Bitget Exchange. I'm not just saying that to shill you guys a referral link. Honestly, sign up without the referral link. I don't care. I'm honestly telling you guys 0.02% trading fees is just too good to miss. You just really can't miss it. It's 0.02%, guys. It's insane. But this is the futures over here, and it's a global exchange that doesn't have KYC, so anyone can access this from anywhere in the world and get access to all the tools. So whether you're in Australia and you generally can't access futures, you can sign up here and get access to futures. If you're in, let's say for example, I think the UK and you can't get access to futures, you can sign up here and get access to futures. If you're in America and you can't get access to Binance or Binance Global and you can't access a lot of their spot trading pairs, they have all the spot trading pairs that Binance has over here plus more. They have over 250 spot trading pairs and all the big ones on this exchange that you can trade, and the liquidity is quite high. So I highly recommend signing up here, and of course, like I just mentioned, you get access to that reward center, just copy trading, there's a whole range of other things, and go ahead and sign up, guys, because it really is probably the best exchange out there. All right, let's go ahead and get back into the video. Okay guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the Crypto Academy courses at gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.